Hi everyone, let's go over my Elliott wave scenarios on the Bitcoin chart, starting with the impulse to the downside, where we are still looking for lower prices as we want to see a 5-wave structure and then price to move back towards the upside. In this scenario, we are waiting for a bigger sideways range to form in the blue wave 4. The common target for your wave 4 is between the 0.5 and the 0.236 Fibonacci, giving you a target between 98.5k and 95k, with the invalidation being the 0.618 at 100k. The fibs are pulled from the end of your wave 2 to the current low here on the chart because you have to pull it to the end of your wave 3. If price, however, would move towards the downside before creating a bigger range, you pull it from the end of 2 to wherever the low is. What is also important to note is that a wave 4 of a higher degree, which is the blue wave 4, typically retraces to the price section of a wave 4 of a lower degree, which is the white wave 4, because if we talk about degrees, your blue count here is your higher degree Elliott wave count, and then in white you have a lower degree 1, 2, 3, 4, 5, which is a sub-degree of the blue wave 3. So therefore, this range is important as a target for your blue wave 4. Now what can help is that the weekend is coming up. So the weekend most commonly creates a sideways ranging structure, which is exactly what we like to see in this wave 4. After 4, we want to see one more 5-wave structure down and continuation to the upside. In the second scenario, we do not want to see price move back down after we start creating a bigger range, because here we're looking for a WXY double zigzag. So we have an ABC in a wave W, then we have our wave X, and another ABC to the downside in a wave Y. When your wave Y is finished, we want to see price move towards the upside, and in other words, we want price to move towards the upside to touch at least the 0.618 before creating another low. That would increase probabilities for a WXY. The target area for your wave Y is between the 1 and the 1.236 most commonly, but the 1.618 is still quite a common target. So therefore, I put everything on my chart, 93.6k to 88.3k. In this scenario, your wave X touched the 0.382, which is perfectly fine for a double zigzag wave X. The reason why this scenario struck me earlier today is because of the size of the ranges. You can see that the ranges are quite similar in size, and that is something you do like to see in a double zigzag. Now the good thing is that in both this scenario here as well as in the impulse scenario, you are waiting for a bigger bounce and a range to form, and then we take it from there. You can also see that we are now hitting some support levels. Finally, we were looking for price to hit some of these boxes. The first one here is touched 91.2k to 92.2k, including this weekly naked point of control. Beautiful bounce locally at the moment. Below this, we have 89.4k to 90k, and then 86.9k to 87.4k. Another thing I like to cover is the 886 Fibonacci, because it plays a very important role in trending structures. And basically what it means is the moment a range forms, you can pull an 886 from the low to the high. The moment the 886 is touched, it is very common for price to create a bounce and move to at least the golden pocket. However, after a move to the upside, the probabilities are very high to take out this low. Basically, the 886 is a common target for a wave B, wave X, or any corrective structure, and the move to the upside typically is a wave C, wave Y, or any other corrective structure. It is a very rare target for a wave 2. Therefore, the probabilities are higher that price comes back down to continue the trend. And you can see we had the 886 touched here at about 103.4k. Once again, over here, price moved to the upside, came back down. That was early this morning, which also was one of the reasons why when I woke up, I took a new short position. And then even locally on a 3-minute time frame, it doesn't really matter on what time frame you use it, as long as you use the correct pull. Over here, from the low to the high, 886 touch to the golden pocket, fails, moves to the downside, and now here we are at the weekly naked point of control. So I can definitely recommend using the 886. I don't yet have an educational video on the 886, but in the Elliott Wave compendium that we are developing, the 886 will have its own pages. If you then look at the news, then today we still have some high impact news. 2:30 p.m. Central European time. Make sure you trade safe as it can increase the volatility on the chart. If we then finally talk about the probabilities, then at the moment in both of the scenarios, we are just waiting for a bounce and a range. So here on the 1 hour, as price continues down, we wait for new ranges to form to give all the info we need. Either a wave 4 or a finished WXY double zigzag. Now we are approaching areas of support, important to observe the reaction here. And you can also see my polylines here. So before the weekend, or at least during the weekend, we would expect price to create a low, create a range, and then based on that range, we will know what scenario gets the higher probability. But on the quote-unquote short term, the price movement is relatively similar, where we are waiting for a low to form and then for price to create a bounce. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.